the pushback is that the Republicans are going to end up checking themselves. You mentioned Medicare and Medicaid, right? These are the entitlements, very, very controversial as well as politically sensitive. And I say check themselves simply because you've got midterms coming up in November of next year, and they're going to look pretty bad if they start cutting that.
It is going to be difficult, right? So I think the way they're trying to do it in some of the initial proposals is it's kind of sort of backloaded. When these things they start to kick in, the cutback there in terms of eligibility and those sorts of things, right? So they're trying to sort of, I think, balance the need for consolidation with, should we say, the need for, should we say, doing well in midterm elections, right? It's not an easy balance to make, right? But if they're not going to cut these things, they have to cut somewhere else, or they have to basically put on ice some of those other proposed tax cuts that they had in mind.
The sequencing, trade court ruled they're off, then pause. Now they're actually continuing still, right? Yeah. And they're kind of in limbo. But while the courts work things out, I mean, they're still in effect, right? When are we likely to start seeing the real evidence in data that is affecting the economy? I mean, how important is the jobs report on Friday?
Yeah, so that's going to be an important gauge, right, of to what extent we're going to start to see the impact on the broader economy, right? I think one thing that's important to keep in mind, though, when it comes to labor markets, they're always a bit laggy in terms of picking up slowdown, right? Especially when you say labor market conditions broadly in the U.S. are okay. So this means that employers are going to be still hoarding labor and be a bit reluctant to cut, right? But you are starting to see the impact of the trade war already, right? We had import numbers that just tanked in April, right? I think if you look a bit closer at the PCE inflation numbers that came out last week, a lot of the reason why it came off was actually because the fees you pay for portfolio managers had come off significantly because markets had tanked, right? And then instead, if you look at some of the more import-sensitive items like, sporting equipment, household appliances and those sorts of things, prices for those have actually started to go up, right? So you are starting to see some of that in the inflation numbers, essentially, right? But I think we have to probably be into July, August before we see more notable slowdown in the real economy, because there will still be some of that front loading taking place this month and next.
House view, are we going to be dipping into a recession or not?
So our house view now is we're just going to avoid it if things they stay where they are and we don't have a further escalation. They may not, right? But our base call is that things would be, it would stay with 10% on everybody else, 30% on China, selective, should we say, tariff on certain sectors, etc. Right? So on that background, we come out where the growth forecast is for the U.S. of 1.5%. Right? So we probably barely avoid a recession in the second half. But they're not off the recession watch as far as I'm concerned. Right? I mean, it's still a decent probability of recession, 35 to 40%. I would put it at.
So, we talked about how politics could constrain the Trump agenda, right, with the midterms coming up, et cetera. What about the economy, real data, and what about markets? How much of a checking effect do they have right now, do you think, on the White House?
I mean, so they definitely had an effect back in early April, right, when they backtracked on the reciprocal tariffs, right? And I think it dawned on the Trump administration that these policies not only going to spook markets, right, but also will have adverse economic implications. Plus, they were not very popular in general among the population as well, right? So I think on those three fronts, right, there's some checks in place, right? But they're also still quite insistent, right, on pushing through with the tariffs levels in some sense that we have in place right now. So I don't think that's going to go away effectively, right? Markets, I would also say, are they checking things? Maybe bond markets are. If you look at U.S. equity markets and valuations right now, they to me are not baking in an economy that's going to slow to 1.5% this year.
Not at all.
Or
Almost back near record highs.
Exactly,
right?
Right. So I think that is setting itself up for drawdown risks.
Although the 10-year at 440
could creep higher. Yeah.